Hello everyone and welcome to our inventory practice exercise video for the periodic weighted average method. So we've had a few videos prior to this dealing with all of the other inventory costing methods. Now we're dealing with the periodic weighted average method. If you have a problem in your textbook or in real life that asks you to calculate under one of the other methods, I would recommend going through some of those previous videos and seeing how everything compares. So with this method, what I'll mention here is that the periodic weighted average method actually tends to be the easiest of all methods. Once you understand the basic calculations, the work required is much easier than even FIFO or LIFO or certainly perpetual weighted average. I would say the perpetual weighted average is the most complex method to document, and the periodic weighted average is the easiest. So first of all, let's talk about perpetual versus periodic. Recall that perpetual basically means that every single time you have a sale, you're going to have to do your calculation to determine the cost of goods sold for that individual sale based on the inventory you had up to that point. With the periodic method, however, we only do one calculation at the very end of the period. So what that means is if we were doing perpetual, we have three different sales in this example. We would have to do three separate calculations, but since we're doing periodic right now, we take a look at all of the inventory and do one sale. So it's an easier method, and the weighted average makes it even easier because you do one weighted average calculation and you're good to go. So what I would suggest when you're seeing a problem like this is a pretty standard data set. You have a month of data, you have some purchases, some sales, the cost per unit for the items purchased, and then the sales price per unit just for the sales. It's important to keep those separate. Obviously, the sales price is going to be higher than the cost. Don't mix the two together, though. You need to keep track of them separately for different purposes. What I like to do when facing a problem like this or a data set like this is I like to create a total cost and a total sales column. For every line, that way we can just calculate, 150 units multiplied by the $11. So 150 multiplied by 11. We're going to go down and do the same thing. Of course, some of these rows were not cost rows, they were sales. So we have to multiply the units by the sales price for those. And just kind of cleaning things up there. It's always nice to have a grand total column or line, just so you know what the total amount is for your costs and for your sales. What I'll mention though is those two, see how quick and easy that was to create? That actually takes care of two of our different questions down below. So that'll be nice to have that done and out of the way. So now let's take a look at the questions. How many units were available for sale during the period? Looks like we have two words there. How many units were available for sale during the period? This is simply, I'm going to move this row down. This is simply a unit question. How many units? It doesn't have anything to do with cost or dollars, sales price, anything like that. How many units were available for sale? We had 150 at the beginning. We purchased 110. We're going to ignore the sales for right now because we're just talking about the units that we could have sold. So I'm just adding all the purchases. How many units were sold? Of course, that's going to be the actual sales numbers. And then how many units remained in ending inventory? If we had 560 available, we sold 415. Of course, we only have 145 left in ending inventory. So those are the unit questions that are going to be the same under any method. Number 4, what is the value of the goods available for sale throughout the period? In this case, goods available for sale, the value would be cost. And fortunately, we already calculated the cost. The total cost is at $68.50. What is the value of total sales throughout the period? Well, we calculated that as well. The $89.35. So what I want to mention here is that these first 5 questions are going to be identical regardless of which of the 6 different methods you're using. These have nothing to do with the method. The method itself determines only how a cost comes out of ending inventory and over to cost of goods sold, in what order, essentially. That's the only thing the methods do, really both perpetual and periodic as well as FIFO, LIFO, weighted average. So now, number 6 and 7, this is where we get to the methods, where the methods start to matter. Now, if you've gone through the other videos, what we did was we copied our data set down here at the bottom to kind of recreate things to show how items were moving out of cost or out of ending inventory to cost of goods sold. For periodic weighted average, we don't even really have to do that. What we need to do by the name, weighted average, means we have to have a weighted average cost per unit. So that's not one of our questions, but we need the answer to that before we can answer our question. So I'm just going to put it down here. We need to get a weighted average cost per unit. Now, weighted average cost per unit basically means that we're taking the total cost of the goods that were available for sale divided by the total units available for sale. Fortunately, we already have both of those items. We have the total cost of all those units, and we have the total number of units. So the first challenge is remembering which way to divide. It's easy to get that backwards. Just remember, it's a cost per unit. So take cost divided by units. So our weighted average cost per unit, I'm going to extend that out to 4 digits, 4 decimal points, 4 decimal places, just to help out with the rounding, get a more accurate number. Now, the good thing here is that this method is so easy because once you get this calculated, this tells you that every unit that's in ending inventory is worth $12 and about 23 cents. Every unit that's in cost of goods sold, or every unit that's been sold, the cost was about $12.23. Now, if you just quickly take a look up here at the actual costs, $12.23 is pretty close to right in the middle here. It's not going to be a simple average of just adding these costs, dividing by, 5? There are 5 different costs here. If we did that, we would actually get $12.35, as you can see down here. This is not a simple average, it's a weighted average. So it's weighted by how many units we have at each cost level. And you can see that we have the highest one is the 120 units at $13. So that helps to weight it a little bit higher. But then we have quite a few, we have 150. That's even higher at $11 per unit. So that weights it a little bit on the lower side. So again, the easiest way to do it is calculate your cost, calculate your total units, and divide the two. So the good news is, now that we have this $12.23, we can take it and move it up here right beside our units sold as well as our units in ending inventory. And for that matter, if we wanted to, we could do it for the total line as well. And I'll just show you why we might want to do that. If we take 560, those are the units available for sale, multiplied by 12.23.21. Notice, and this was rounded, we don't need it rounded out that far anymore. That was exactly $68.50, which we already knew the total cost was $68.50. So that's just kind of to make sure you're doing the right thing, that you're understanding it fully. We don't really need that number, but we do need the units sold, 415, multiplied by that $12.23, and then the 145 units in ending inventory multiplied by that same cost. Again, if you add them together, you have to come up with that $68.50. The good news is these are the answers we need for 6 and 7, and they just so happen to be in the right order. Cost of goods sold would be related to the number of units sold. So I'm just going to put in 5076.34. And units remaining in ending inventory, that's the value of the ending inventory. Just format it to make it look nice. And we are done with this problem. So again, weighted average is pretty straightforward once you understand how to calculate the cost per unit. You've already got every other piece that you need. You already have the unit counts. If your problem didn't ask for them, then you have to calculate them now in order to do the rest of the problem. But really, there shouldn't be any challenges. There are a couple of check figures kind of built into it. Hopefully this has helped to clarify how to do the periodic weighted average method. Keep in mind I have videos for these other 4 different methods. Notice that perpetual and periodic FIFO, the video for that, they're the same. It's one video covering both because the results are exactly the same. But LIFO has different results for perpetual versus periodic. And of course, weighted average definitely has different results. And they're on the far ends of the spectrum as far as complexity. So I thank you for your time, and please feel free to check out those other videos. We will have more loaded on other topics soon. Thanks, and have a great day.